to the big policy story of the evening. The market regulator has decided to pay heed to the special investigation team's decision to tighten participatory note disclosure norms in a bid to curb round tripping. Kritika Saxena is joining in with all the details. Kritika, this is a policy that was in the works for a while. The SIT really gave the hints, many months ago. Now, what's in the fine print?
So essentially, SEBI has tightened the norms or the current norms on P notes to curb round tripping and ease in the regulations. So there are 6 huge takeaways, in fact, should be from the board meet today. But let's talk about P notes first. They've tightened the entire ambit of P notes. So now P note holders will be brought under the ambit of Indian KYC or the anti-money laundering norms. So what that will do is that will remove the opacity that was there in the system. So there are other details that they have mentioned, and this was broken by CNBC TV 18 before the circular came out. New P note proposal will follow the recommendations that had been made by the SIT. The suspicious transactions will be reported to a financial intelligence unit. P note issuers, and this is very important, will be asked to reconfirm their position, that is the ODI positions, on a semi-annual basis. Now, there will be a consent mechanism that will be put into place wherein transfer of P notes will not be allowed before the prior consent of the individual issuers. Now, KYC review will be done on a basis of risk criteria that will be determined by the issuers. So this could be on a semi-annual basis, but if the issuer, say, wants it on a quarterly basis or a monthly basis, then a KYC review will be done. Now, the issuers will have to put in place a system to carry out a periodic review. So that could be a little bit of a question there, given this will be on a case-to-case basis on how issuers want to bring this up. And in trying to curb the kind of money laundering that does happen, they will have to report intermediate P note transfers on a monthly basis, and they will have to report on suspicious transactions. And if there is a suspicious transaction, SEBI will issue a penalty on it. So in a sense, they've tried to simplify the system and curb the kind of round tripping that they have been seeing, Surabhi.